content area, right? I uploaded some of the anyone in the online class? No? All right. You know. Last week we had boys, right, in the class. Not only girls. Okay. Paulo then Nota in pa. Right. I uploaded most materials, the LMS, uh, yes. Here we have one past paper and the syllabus content, and you have the materials for 2 weeks. All those things. That is it. Right. I think I did discuss this one introduction. These are the, I didn't open this. These are the 4 contents we are discussing here. Areas, 4 areas with weightage. And giving more priority for standards, 40%. Right. And then today I'm focusing about fourth one. What is that? Analysis and interpretation of financial statements. Finance statement analysis plus interpretation. Analysis and interpretation. So these are 2 topics, analysis and interpretation. So first one is what we need to do. We need to prepare financial statement. Prepare financial statement. I think it is the process of one, the financial accounting process definition, right? You know financial accounting process, is it? So gathering evidence about transaction, collecting, summarizing, and this story, right? Type of a definition, right? We had in an organization, or maybe a business or some organization, charitable organization, whatever the organization. Sometimes it may have legal, no, registration number. Maybe the artificial intelligence may not, right? If it's a sole proprietorship, it is not an artificial person. There's no incorporation number, right? The person and the owner and the company we consider as one. It is sole proprietorship. It's a private limited company. It will be private limited company too. Whatever the organization, right? Whatever the organization we are counting, we consider as owner and the entities, 2 separate entities. That is called entity concept. I hope you know that, right? Entity concept. We start from here and starting a business. Can be private limited company, sole proprietorship, or NGO, or maybe a partnership, different type of content, or government organization. But whatever organization you are thinking that it's operating. It's operating means they are doing transactions. Transactions. So the financial accounting is a process they are using to record these transactions. And not only that, record, summarize, analyze, interpret, and interpretation result to the stakeholders. Communication is a part of that. Right? About these transactions, we get the evidence from where? Those documents. Those documents. We had sourced many source documents, right? Vouchers, check, counterpoint, uh, petty cash voucher, general voucher, credit note, debit note, different source documents. By using these different source documents, what we are doing? Next step. You need to record in a book. Right? You have to record in a book. Yes. So yes. Okay. Yes. Okay. Right, I'll let you know. Give me 5 minutes, I'll let you know. Right. Give me a second. No. Yes, after. Right. See. So if there are noise, you should come for the lectures, right? I'm not controlling you. I'm dealing with the exception. That's try to make it. Try to make your fullest efforts to come the lecture morning, right? They learn a lot here. So source document, and then initial books. Initial books. In other words, journal. And then they are moving to ledger. This is the area we are focusing as a counter. Ledger means it is a maybe a cupboard, maybe a type of a long book or type of a computer or mobile phone or another device having double entry mechanism, right? Having double entry mechanism in between 5 accounts, right? So we are having 3 accounts with double entry mechanism. We call as a ledger, right? We call as a ledger. So whatever the transaction in the organization should pass to this ledger. After completing 1 year, we are getting summary of this. What is that? Trial balance. Equal as trial balance. Equal as trial balance. In this trial balance, we are getting a summary of 5 accounts. What are these 5 accounts? Assets, income, expense, liabilities, and equity. The other 5 accounts. Under this TB, we may not have only 5 accounts. Under these 5 accounts, we may have millions of accounts sometimes, or 1,500 accounts, right? So asset accounts maybe have different type of asset account. All the accounts can be divided into this, including sometimes in the TB, there may be some temporary suspense accounts, right? Other than the suspense accounts or temporary account like asset disposal account, cost of control account, right? Those are temporary account. We need to close it up. But altogether, it is still 5 different accounts I have seen. For TB, right? After TB, we are doing some adjustments. Maybe based on a bank statement, maybe sometimes inventory related adjustments, or else depreciation related adjustments. Year-end adjustments need to be. These adjustments will be tested in your exam in this area. You have a separate question over there for adjustments, right? If you remember that, this area will be tested. EB plus adjustment. It's a one question for you all. This one. We discussed last week. What's the expectation? What's the type? What are the adjustment? Yeah, you should focus. It will be tested. And then today, this topic, you should know the link, right? Where we are, what we are going to do here. So this TB and adjustment, and then you are preparing financial statement. Financial statement elements, 5 elements, P&L, statement of financial position, cash flow, equity statement, note and disclosures. Under P&L, we had to last week we discussed. Can remember. Another they are P&L making. Statement of income and OCI. Right? OCI having two. What are they? Reclassify to P&L or recycling to P&L. Recycling to P&L, not recycling to P&L. I hope you know that. Then you should know that these are basics. The basics from here. The basics. P&L having two parts. Today you should get that knowledge. Statement of income, other comprehensive income. Why we are having these two? This P&L we are preparing to calculate the company profitability performance. In other words, director board's management performance. Right. Once you are calculating management performance, there may be unrealized activities maybe transactions, maybe incidents, right? We are doing that without controlling of the management, without a decision from the management. It is not a management performance. So then how we can include that to the company performance? That is a doubt. That's a concern. So exchange rate is getting fluctuated. Unrealized exchange gain, is that the management performance? No. Exchange rate taking a gain in the management performance? No. Right? Unrealized gain. But if we are dealing with a kind of a forward contract or hedging, if we are getting a gain through that, if you are reducing a loss through that, it's a management decision. Once you are doing a transaction in a foreign party, we are having a risk to mitigate that. If you are going for forward contract, it is a management decision. That should be accounted in P&L. Otherwise, in the whatever the transactions, whatever the assets, whatever the incidents, we are comparing with the market and getting a gain to the books, unrealized gains we are parking here, OCI. Why? We are not mixing it. Income statement. Reason. We don't want to penalize, we don't want to nullify, set off whatever the inefficiencies in the management or the performance in the management side with market impacts. Otherwise, sometimes it may be reasonable, sometimes it may be negative impact to the management. If we are mixing with this market performance, according to the market, this rupee will be getting depreciated. Right? We will be getting depreciated. If it is so, if we are having a loan or something like that, sometimes you may not have an option to do that. Right? If it is so, you need to park this unrealized transaction, gain or losses in OCI, and realized or management related decision type of gain and losses we are parking income statement. And OCI also having two parts. Recycling to P&L, not recycling to P&L. Some of the gains we are parking till the recycling, till the realization. After realization, we are getting that again to the P&L. So we have two types. We need to look at very carefully this. Then make our example is done for. Recycling to P&L, not recycling to P&L. If you remember this, I'm coming to the lesson, right? I'm quickly discussing this content. Why I'm discussing this? I'm planning to do the group assignment on this topic. That's why I'm completing this very fast. Okay. The financial statement. So this is a type of area will be tested in the exam. From this, through the financial statement, you can get different numbers. You can't stop from here. Financial statement. And next step, analysis should be done. That is called financial statement analysis. And then after analysis, what we need to do? Interpretation, and then communication. Interpretation and communication. Analysis, interpretation and communication. Interpretation and communication. මේ මොනවද මේ ස්ටෙප් දෙක තියෙන්නේ? ඒව තමයි ස්ටෙප්. මොනවද? දැන් මෙතනින් ආයෙත් ලින්ක් කරගන්න එපා නේද? Separate that. Those documents initial books, ledger, trial balance, financial statements, financial statement analysis, interpretation, and communication. That's all about financial reporting. Right? Now we are here in analysis and interpretation. මේ topic එකේදී අපි කතා කරන්නේ මේ topic එක. Right? While group assignment එකේදී ඔයා මේක communicate කරන්න. Right? Once you are presenting, once you are making your presentations, what you are going to do? You are going to communicate. Right? So analyzing financial statement, interpretation, and communication. Communication, you can come up with the dashboard, you can present it, right? You can discuss, you can identify differences. You have to develop a story behind this financial statement. You remember that. The basic thing is, once you are analyzing and interpretation, once you are doing this, definitely you need to focus about the qualitative information and quantitative information both. Info and qualitative and quantitative information both should be used. Qualitative info, quantitative info. This is the area today I'm going to discuss here very quickly with you all. I hope the topic is very clear for you to study. What I make story only මතක තියාගන්න. නැත්නම් මට මතක තියෙන්නේ නැහැ. Financial statement analysis මොකක්ද මේ topics වල link එක. අපි හැම වෙලේම මේ topics set එකයි මේ subject එකට දාලා තියෙන්නේ. We are having a close relationship. It is one subject, financial reporting. Right? You know, given 4 chapters. In between 4 chapters, we are having a link. Those 2 and 3 discuss about what? Discuss about this preparation of financial statement and accounting standard and according to that, right? And this one is the topic today we are discussing. First one, regulatory framework, governance, ethics, financial reporting. What is that? Is that a separate topic? Separate something? No. As a business, as owner, do we need to prepare financial statement? What's the background? How we are going to ethical on this? What are the ethical background as an accountant? What are the regulatory requirements? Why we are need to do this? Why we are need to do this process? Will be discussed under first topic. The requirement, preparation, interpretation, and communication. That's the overall process of your subject. I hope you are in a very good understanding about the content. That's very important. For overall topic, we are having only 45 hours. That not be. You can't say that it is enough, right? We can discuss using 45 hours only 3 standards sometimes. You are having 15, you are having 16, and 9. These 3 standards can be discussed by using 45 hours. So yeah, other than that, we are having many standards, consolidation, interpretation, many things, right? So it's a very tight, very lengthy syllabus, but we are completing by covering all the areas with practical questions and having practical knowledge in the classroom. So that's the first time you are learning the standard. It should be the last time. Sometime it will be the first time you are learning. After completing one standard, it should be the last time you are learning it. That's the certificate I can give. Whatever the standard, right? You are learning here if you are coming to lectures. Otherwise, you can learn that in different ways. That's all right. Those are very good, right? In modern techniques, we are having different social platforms and different techniques and chat box. You can ask for questions and you can learn it. What you can do, download the standard and put that to the chat GPT. Ask from chatbot what are the possible concerned questions will be tested in the exam. He can give that list of concern with answers. You can ready for that before you're coming to the exam, right? But here story is different. We're discussing practical aspects and we are having case studies and practically we are discussing what's happening behind the standard. Okay. That's the requirement. I hope you are okay with this. The other topics I discussed last week, I'm not going to discuss. Start the content, right? Go to our 3D materials. මම අප්ලෝඩ් කරලා තියෙන්නේ. මේව බලන්න පුළුවන්. right? Paper structure marks, කතා කරන details, right? Past papers, yes, you need to do past papers. Okay. Other papers can do, not a must. Right? Self-study is a must. So depend on the classroom, class materials. After learning one standard, you need to start your learning about that standard. Self-study is a must. If you remember that.
Excuse me.
Tension based. Happen if I presentation students.
Yes.
Which are the subject? We just started this semester, right?
The first year, second semester, we parallelly start the second year, some two subjects.
Okay. That's the reason. Right, we are here learning about this introduction we completed and we laid down a foundation for our topic, right? Financial statement analysis. I hope you can understand that. Is the marking the marks will be allocated like this. Individual report, group report, right? Presentation and final exam. So the marking expectation. So this final exam 60 will be difficult part, right? You need to work hard on this. And then group presentation, group report, you can 4 marks. Group report, I'm evaluating commonly, not individually, right? But group presentation, I'm evaluating individual level, right? So individual performance will be validated under group presentation. And individual report, sometimes you may not have this individual report. You will see in the classroom you are having many assignments, continuous assignments, right? If you remember that after completing one chapter, one area, you are having an assignment on that area. So those will be accumulated, collated under this topic. This individual level assignments. So this is the structure. Paper structure we discussed last week, expectation and in detail we discussed about the paper, right? So that's it about this introduction about the subject. Right. We are moving to the next topic. Financial statement analysis. Financial statement analysis, I'm repeating myself again. Why I'm doing this? I'm focusing to give the group assignments on this topic. That's why I'm going to complete this as soon as possible. Once you are completing this is the accounting journey we discussed now. And from entity to transaction, source documents, initial books, journals, ledger, trial balance, financial statements. These are the element of financial statement. Financial statement have 5 elements and P&L having 2 parts. Statement of income, OCI. OCI having 2 parts, recycling to P&L, not recycle to P&L. By using this financial statement as accountant, first task we need to analyze numbers. Once you analyze, you need to mix that with the qualitative figures as well. You can't do analysis only by using numbers. You need to mix with qualitative aspects. What are the qualitative? Geographical location, customer satisfaction, complaints, employee competencies, and standard violations, compliance, and all these qualitative aspects should be mixed with numbers and get the answer. And then interpret it. Once you are interpreting, once you are doing the interpretation, make sure that you are mixing that numbers with qualitative information and come up with a very sound story about the organization. That's for interpretation. That result should be communicated properly. This is the area you are focusing about in your group assignment. You will be given a ratio analysis or financial statement analysis about the sector, and you need to showcase that as a dashboard and communicate, means presenting. That's the part will be tested in the individual group assignment and group report. Okay. That's why I'm focusing this quickly, and we are planning to finish it off very soon. Right? Today I'm planning to finish this. Then one chapter, one area finish. And we had 4 areas. I hope you are comfortable with that. What are the 4 areas? The 4 areas, exam making. What are they? Word by word, what give? Syllabus syllabus will be consist with 4 areas. What are they? Counting requirement plus ethics and standards, financial statement, task control, and then this topic, financial statement analysis. These are the 4 areas we will be tested in the exam. Please focus these 4 and get ready the exam. Now we are moving to 4th topic, financial statement analysis. Right? Financial statement analysis. Financial statement analysis can be done by using different techniques. Right? Different techniques. right? Financial statement analysis, different techniques. Okay. Once you are doing this financial statement analysis, you may have different type of techniques with this technological transformation, development. You may have different tools, and that's what we are discussing about this big data, data analytics. And once we are discussing this big data and data analytics, we are discussing about financial data and non-financial data, right? So with the technological aspect, we are having different tools and different type of dashboards, data visualization about this topic. So this will be done in a very granular level in this modern world for decision making purpose. If you remember that this is a area you have to play your role in your future. That's very important. Not about double entry, not about financial statement preparation. That will be done by a robot. That will be done by a software, right? So this is the area you are going to perform your duty as an accountant. That's all about interpretation, communication. Analysis also will be done by the robot, right? Analysis and the dashboard will be displayed. All this process from here to here. This topic also will be transferred from your role. So this topic also will be replaced by a robot technology. And you are heading to interpretation and communication. This is also sometimes they are taking this responsibility as well by interpretation. The AI can interpret to some extent. They can communicate, right? It means you are losing your job, but still we need your requirement, we need your contribution to interpret the human involvement. It is required by the changes in the transaction always happening. Different transaction, creative transaction will be happening. Still, we are struggling to sometimes record this, interpret this. That's why we are having standard, the interpretations. We are writing to the CA Sri Lanka, some of the transaction. They don't have the answer sometimes. They are writing to the International Accounting Federation, right? So they are getting that consultation sometimes. Likewise, for some transaction, we are having that complexity. Because of that, your role is very important. If you remember that, this is the area you are going to play your role in your future. That's all about financial statement, interpretation, and communication. For that, we are using different techniques. Here we are going to discuss about what are the techniques we are using. The main techniques we are using, ratios. Ratio analysis is one of the key technique we are using. Right? Ratio is the basic. I think you are comfortable with these ratios to some extent. Here what we are doing is not practicing to calculate ratios, right? We are going to discuss about the content of the ratio, meaning of that, and what are the different practical scenarios behind that. About ratios, right? We know that example ratios, what are they? Yeah, they have kind of gross margin. That is net value. Debt value is a number. Ratio means always we are comparing two numbers in the two or more numbers in the balance sheet, financial statement, or that set of financial statement. We compare two numbers or more numbers and giving one particular number. Ratio means that is maybe type of a percentage or times, or sometimes it may be type of a number of days. Different answers will be there. Terms, types, different answers will be there, right? Once you're getting that answer, you're combining two or more numbers in your financial statement. Sometimes it's a base number, sometimes it's a independent number and dependent number. You are comparing your sales versus cost of sales, your sales versus gross margin. Okay. Sometimes you are comparing this sales versus some other factors, number of employees, right? So it is financial and non-financial information. You can do that. That depends on your requirement. There's no hard and fast rule specifying this ratio for particular sectors or particular industries. Only one standard will be given for ratios. Other than that, you can decide what are the ratios you need. You can decide the process you are following to calculate ratios. Right? Ratios, there's no rules and regulations behind ratios. All are practices other than one ratio. What is that? All these ratios are came to the picture because of the requirement, right? Here we are discussing about very general ratios, not specific ratios. Once you are discussing about these general ratios, you need to know about the basic background understanding of implication of ratios. And once you are doing industry analysis, right, in your assignment, you need to go to specific ratios in that particular industry. What do you mean by that? Industry wise, maybe not country specific. Country specific ratios. Sometimes you may have, if you are in a different, maybe in different region, there are regulatory requirement or geographical type of thing, or sometimes seasonal fluctuations will be monitored through different ratios. Other than that, the geographically, the ratios may not be changed. But industry specific ratios are there. Industry wise, you need to focus about the implication of ratios. That's very important. The banking industry differs with insurance industry and hotel sector, maybe service sector, hospitals, and some other power and energy business. Different sectors are there. Plantation, right? Agricultural business. Once you analyze in these industries, definitely you are having different type of ratios. Don't calculate occupancy ratio for bank. You are calculating occupancy ratio for hotel, right? Likewise, solvency ratio for bank. This claim ratio, a total loss ratio for insurance company. Likewise, we are having very sensitive industry specific ratios. Keep remember that. Before we are going to that level, we need to know what the ratio is, how we are going to calculate it, what are the type of ratios, what is the requirements behind this. Under requirements, now I'm discussing, we are having list of ratios. For this list of ratios, only one ratio having a standard. What are the list of ratios? Gross margin, net profit margin, right? Inventory recovery, debtor recovery, creditor recovery, earning per share, price earning ratio, dividend earning ratio, interest cover ratio, return on equity, return on asset, different ratios are there. Okay. Under this, you can create ratios. How we are going to calculate ratios? You can create a ratio, sales versus marketing expense. You can come up with a ratio. Right? You can decide a ratio. That's all right. Once you're analyzing, you need to, no need to calculate gross margin to an insurance company. You can't calculate it, right? Gross margin to sometimes a bank, no need to calculate. How are you going to calculate? Are they having sales? In other words, we need to calculate something else, right? So we need to be creative behind ratios. But one standard is there for one ratio. What is that? Earning per share. EPS is a another ratio, right? Another ratio, very sensitive ratio, very important ratio. That's why we are having the standard. Why we are having this standard in different areas? Sometimes sound areas we don't have a standard. Some areas we are having a standard. Why? Any standard real thing. What's the reason behind that? Standard some other areas is standard, some other areas not. What electricity expense is specific standard in that way? You don't have standard for electricity expense, but you are having standard for inventory. You are having standard for PPND. IP you are having standard, but table and fittings you don't have standard. Machines you don't have standard. Separate. Biological assets you do have a standard. Right? Investment, yeah, investment at least you can get financial instrument is have a sign, right? We don't have a specific standard for them. Right? Why we are having specific standard for some areas? For deferred tax, taxation we are having separate standard. IP we are having a separate standard. Right? Borrowing cost. Borrowing cost means the interest cost. Interest cost, we are getting a loan for qualifying asset. At that qualifying period, the interest cost should be capitalized as asset. That's what borrowing cost we are having. LPS 23. Right. Why we are having that? We are not having a standard for interest cost, but we are having a standard for borrowing cost. Something a kind of a upper question. Why? Whatever the complexity behind this, people are doing mistakes, people are playing around there in these numbers, right? Because of that, financial statement setters should control this. They need to improve what? The comparability of the financial information. To enhance that comparability, what they are doing? They are giving standard. You need to do this way. Otherwise, you are playing around this. You will calculate this based on your choice. Then that will be happen to earning per share as well. Earning per, why we are having this standard? That area will be very important. That area will be very complex. And there will be many options to calculate it. If it is so, people can play around that. Because of that, we are having different standard. Okay? Standard may have different LKS and IFRS. Yes, they are, you know, right? LKS and IFRS. Not only that, we are having SIC, we are having IFRIC, we are having SOT, we are having so different standard. You should know, right? Why we are reading for accounting degree. These are the rules and regulations. You need to be very careful about these things. I'm asking here, what's the difference between this IFRS and LKS? Itu kan temporary. LKS 34, LKS 33, sorry. Earning per share. LKS 41, agriculture. 23, borrowing costs. Right. I guess we have LKS and SLFRS. SLFRS. And currently we are having IAS and IFRS. What are they? Are they same sets? Why we are having two sets? We can compare with IFRS and IAS. Right? But why we are having this SLFRS and LKS two sets? Why globally having IFRS and IAS? Any answer? What is the one done? What? IFRS and LKS and SLFRS will deduct it. In my dad,
This one is global.
yeah, local. Correct. IFRS globally counting standard. IFRS and IAS, right? Then one shall convert that to the local countries. And Srilanka adopting that to the local countries. Right. So then their confirming that the adopted as it is. There's no change, difference between the content, right? But once you are localizing, we are putting the country name, Sri Lankan accounting standard, right? IFRS and NKS. So we can say that it is in line with, there's no deviation from the IFRS and IAS. That is clear, right? You can say that there are questions from global forums. You are using LKS and SLFRS. Is there any change between this IFRS? So they are thinking that we may use different set of financial rules. If it is so, our financial statement can't be compared with some other country. That's the overall expectation of this accounting, International Accounting Reporting Board. Maybe they're not achieving that goal. If it is so, then countries adopting that, but it's in line with totally, they confirm that totally in line with the global financial reporting framework, means IAS and IFRS. That doubt is clear. Now we are having two set. What do you mean by that? LKS and SLFRS. IAS and IFRS. Is they okay? That's the good. So going forward, we are not getting any IAS and LKS. LKS, only those standards are there. Going forward, in future, we can't see any LKSs. Right? LKSs. From LKS 41, we don't have any LKS furthermore. Don't expect to have 42. Right? It is stopped from, we had IASB, International Accounting Standard Board. It is converted to committee. Right? With this structural change, from that day onwards, we are getting not LKSs, IASs, we are getting IFRS. Right? IFRS and SLFRS are coming from International Accounting Standard Committee. Right? That structure, with this structural change, this setup change. Right? From that onwards, we are now having IFRS. IFRS 16 came to the picture, 17 in the process, 18 in the process. Right? 16 and Jesus IFRS 15 or Alutna standard 15 revenue with customers. Right? 16 please 17 insurance, correct? Insurance will be adopted in 2026. Globally adopted, we have postponed. Right? They are developing still, right? They are developing country. Standard globally adopting, we are not ready to adopt it. I'm not sure that whether currently we are ready to adopt it. Still we don't. Right? Lesson 18, that's about, again, presentation of financial statement. That's advanced version of LKS 1. Right? So many changes will happen in financial reporting aspects because of syllabus 18. It is yet to be effective. So going forward, in another 20 years' time, you may have another 10 standards. Why? Companies and economy getting complicated means you may have complex transactions, you may have more standards. Right? Parallelly, we have S1, S2, sustainability reporting. Right? That's a revolution in accounting journey. In the sustainability reporting, everything. Hey, sustainability reporting, everything. Are you happy about that? That's another area you can capitalize your journey. Sustainability reporting, if you know that process and reporting aspects, there's a market demand for that type of students. Sustainability on the accountant. Previously, as accountant, we had a bad image, right? We are inhuman, we are dealing with numbers and all. We are always quantifying the numbers. We are not focusing about any other aspects. But now we are moving out from that and we are focusing about sustainability aspects, right? Climate related things and social, economic, social, ESG factors, governance related aspects, carbon neutral, carbon footprint, all these things will be discussed. Then we are giving numbers about sustainability. So that will be linked with this performance. That will be linked with the share values. That be carbon neutral. Lanka means carbon neutral here. Are you getting it? Carbon neutral as a counter. So that's a marketing edge you are having. Carbon neutral. If you are doing that type of marketing in a developed country, you may have more advantages in between your competitors, among your competitors, right? Why? Carbon neutral, whatever the things carbon neutral. SAP is marketing. We are issuing carbon neutral degree. Right? Students in the are we focusing about carbon neutral degree? What is that discussing about? We don't want a carbon neutral degree. We want a degree to go abroad, right? Go to earn more money and search a job. That's our focus. But in developed country students, they are focusing about from their younger age onwards, they are focusing about their society, their environment and everything. They are sensitive about that. They are spending, making money for carbon neutral things. It will add a value to you as well as the society. What it means to you? Once you are developing this good or service, once you are delivering this degree, whatever the carbon emission, not only carbon, not only CO2, we are having under S2. S2 having what are the greenhouse gases? Maybe having 6, 7 examples, methane or some other examples. I can't recall my memory, all this, chemistry related combination, right? Methane, some other greenhouse gases, 5 or 6 were there. Hydrocarbon or something like that, and carbon dioxide. CO2 is a base number, right? What we have to do as a counter, all these greenhouse gases should be converted to CO2 number, right? CO2 number. And that CO2 number, what we can do? From here, what are the CO2 numbers? We are using staff members. They are in exhale, inhale, right? CO2. And we are using these air conditioners and plus building and many many negative, many bad air, bad pollution type of impact to the environment. That will be quantified for the CO2, carbon. And then we are trading with the organization. There are organizations who are producing positive environmental impact. Positive environmental impact. They are growing trees. They are creating environment. They are, saving reservoirs, and they are giving positive impact to the environment. They are calculating it as an organization. As I said, what we have to do to market that carbon neutral degree. Annually calculate your carbon. Maybe, I don't know, maybe 50,000 carbon point. What you can do for 50,000 carbon point, you need to purchase from outside positive company 50,000 carbon point. You need to pay to them and grow, create 50,000 positive impact. Carbon, what do you call that? Carbon against ARO type of positive impact to the society. That is called carbon trading. Calculate your carbon for the year and trade with the. We are giving this bad 50,000 carbon to them. Giving mean we already emit that, all right, and we spend money to emit positive energy. Positive, maybe oxygen. I don't know the process behind that. They are preparing positive, positive combinations to the environment, not like greenhouse gases, right? Healthy gases to the environment. They calculate it to equal to 50,000 carbon. That's called carbon trading. If you are doing that type of activity, we can say that we are selling carbon neutral liquid, right? Once you are doing it, then it's a fact in S1, S2 reporting, right? So as accountant, how we are going to account this? That is the modern trend. That's a trend. You are moving out from hypothetical, traditional, conventional accounting process. Please be ready to that. That's your job market, right? If you are passionate in S1, S2, high demand in the market, right? Right. That's about new standards. I'm discussing about IFRS and LKS, right? Okay, done. I hope it is clear. You know LKS and IFRS now, reference, right? We are having IFRIC and SIC. What are they? SIC. SIC and SIC. No. SIC means Standard Interpretation Committee. SIC, we have numbers, SIC, IFRIC, right? SIC under this LKS and IAS time, we are having SIC. After changing LKS, IAS to IFRS and SLFRS, we are having IFRIC. What are they? SIC, IFRIC and IFRS and IAS. SLFRS, LKS and SLFRS, we are having SIC and IFRIC. What are they? These are the interpretations, right? Interpretation given by the International Accounting Body. Previously, it's a board that's issued by SIC. After that, they are issuing IFRIC. Currently, we are having IFRIC. What is that? We are having standard. So, we are having standard, and then we are having interpretation. By that, we are having LKS 38. I have to discuss. We are having 632. What is that? 632 is what? Website development cost. Interpretation. Once you are developing standard, it's a series of research and many activities, right? We are issuing the standard now. Before the standard, maybe SLFRS 17. I don't know the research, and that's why it was good delay. This SLFRS 17. It's a very complicated standard. We had SLFRS 4. What is that? Insurance. And that's a kind of a lighter version. It's a very basic content is there in SLFRS 4. SLFRS 4 changing to SLFRS 17. In between this period, there were maybe 1,000, maybe more than that, research to develop SLFRS 17. To that extent, it is complicated. To that extent, expert putting effort to come up with a standard to issue. Right? After tabling, after distributing, after implementing the standard, once you are put into the practical world, still some of the gaps are there. They want some interpretations. They're asking, once you are implementing, we said that the given instruction is not that clear in the standard. What they are doing there? They're asking from this international standard board, you have issued this standard like this. We went through the whole standard, but here we have a transaction like this. How we are counting that? Then what they can do? Are they recalling this standard and issuing another standard and putting these things? No, they are not doing that. What they are doing? They are issuing another interpretation relating to that, right? That is called we are having SIC and IPRIC. Okay. SIC and IPRIC are there. It is not a lengthy standard. It is interpretation for small area. Keep remember that. As a counting student, you know that, right? Having this IPRIC and SIC. Okay, I hope that you are clear, right? Having this overall financial statement set up, you are ending with financial results. That financial results may have in different numbers mixed with qualitative numbers and come up with creative. Creative means it should be reflected the real picture of the organization. Don't prepare, ratios the sake of calculating ratios. Don't fill up a dashboard with many ratios, irrelevant ratios. It should be relevant for your organization. That's very important. You can select key maybe 3-4 ratios. That's it. You can give the whole picture of that. Okay? Ratios, this analytic results is like a blood report for your body, right? As a doctor, he wants some reports, right? Not only the reports, he wants something else. What is that? What CT scan එකක් ගත්තොත්, හරි MRI එකක් හරි ගත්තොත්. What a report එකයි තව මොකක් හරි ඕන නේද? What is that? By seeing the report, there should be a diagnostic interpretation type of a essay. I consider the essay. It is an interpretation type of a document. What they are doing as a doctor, they are analyzing by using a tool. There's an MRI machine, right? They are getting a tool and they are getting the results, factual results. Can we see this factual result and get understanding as a layman, as a general patient? Can't. But බලන්න blood report එකේ අර areas benchmarking එක මේ පැත්තේ නැත්තම් ඒක කියන්නේ type of corridor, right? In this number should be in between this. I think you be familiar with this. That is full blood report එකේ make actual this is the corridor and where you are. If it is going out the corridor, it will be colored, right? Risky. It can't be go beyond, or you can't go beyond the boundaries, right? Likewise, you have analysis. In an MRI report, you're having interpretation and a type of a explanation given by a doctor. As a accountant, whatever, the same activity you are going to do, you are supposed to do to a organization. Organization again, doctor කවුද? Accountant. Right? Maybe auditor, maybe advisor. They have come up with thousands, millions of questions. What we have to do? We need to get to their reports, blood reports, right? Analyze, ratio analysis, trend analysis, type of vertical analysis, horizontal analysis, common side financial statement analysis, different analysis. You can do common analysis as well. Maybe correlations, maybe standard deviations, beta factors, different general analytic techniques also can be used for organizations, right? The financial specific analysis or general analysis. So under this analysis topic, we may have different techniques. That's the learning point you should get. We are discussing about financial statement analysis. The results from the financial statement will be analyzed over here. Under here, we are having different techniques. Learning point 1 later, right? So you can write this topic: financial statement analysis and interpretation. It's a topic. Financial statement analysis and interpretation. Yeah. Write it. Once you're analyzing financial statements, right? So here we are writing, right? We are writing, and once you are doing consolidation, you need to bring 2, 3 pens. We are working from right hand to left hand, right? Right hand එක දෙනකොට left hand එකෙන් වැඩ කරන්න. ඔය ready වෙලා ඉන්න ඕන lecture එක. අර conventional නිකම් බලන් ඉඳලා යන lectures නෙමෙයි financial reporting, corporate reporting. Financial reporting එකේ you should practice, corporate reporting you could perform, right? Financial reporting is lighter version. එච්චර මහන්සි වෙන්න එපා. plan එකක් ගෙනාවම ඇති. right hand එක ready කරගත්තම ඇති. හැබැයි left hand එක through වෙන්න ඕන once you're doing corporate reporting. Consolidated step acquisition with foreign currency, right? Subsidiaries. You need to do more than 40 questions in the classroom, right? So that level we need to practice within this degree. Keep remember that it is not this this course, right? This financial reporting is lighter version. I'm not giving that rush to you, but you need to work. You need to write it, right? Okay, write කරලා මේ සමහර ඉන්න හිතන් ඉන්නවා ලියන්නෙම නැහැ කියලා හිතන් ඉන්නවා. I'm not writing any single word in the classroom. Lecture room කියලා හිතන් ඉන්නවා. I determined that I'm not writing any single words in the paper here. So why I am having a good friend, I can get a photocopy. At the last, before the 11th hour of the exam, I can get that photocopy and I can read through and I can get the pass. But it is not that much good, right? You can write it and you can throw away, you can put to the dustbin. But at least you are practicing something here. Why? You are using a pen and your mentality, you are having connection in between your brain and letters with the type of a paper. It is an activity. It's a one task you are doing. The same activity should be repeated in your exam. If you not practice, if you not practice before the exam, that's the second time you are practicing that. If you are doing past papers or some other short notes, you are the third time once you are doing it in the exam. If you are not doing anything, you are not taking any notes. You are taking note from the computer or the printout, right? You are not doing any short note. You are first time you are doing that activity in the exam. What is that? Recall memory, transfer to your brains, and convert that to put that signal to your pen and convert to letters. That's a process. You need to practice it. Otherwise, you are first time doing it in the exam. If you are doing it in an exam like corporate, not financial reporting, not that mama corporate reporting තමයි කරන්නේ. ඒකයි මට corporate reporting එක මතක් වෙන්නේ. හැබැයි ඔයාලට කරන්න කියලා කිව්වා financial reporting. I don't know why. Financial reporting මම ගොඩාක් කරලා නැහැ. එතකොට එක පාස් පේපර් එකයි තියෙන්නේ. එක බැච් එකකට මම financial reporting කරලා තියෙන්නේ. Right? Corporate reporting නම් සේරම කටිට corporate reporting තමයි කරන්නේ. සේරම කටි fail ඉතින්. එදානින්ද තියෙනවා මේ exam එක. I don't know why. Corporate reporting, yeah. Last convocation, before the last convocation, I did the one batch, very recent batch. It was like 60 students in the classroom. I had 150 papers. So, repeatedly, 60 students, exam 40, 20 medical leave at the time, 60, 40 exam 40 to 150 papers. It means 140, 110 students repeated corporate report. Why? This is a core subject of the degree. Don't do it, right? Passion එක තියාගන්න. ඇයි මේ subject එකේ තමයි අපි ඉගෙන ගන්න මොකටද? Don't have very narrow mind to get through the exam and get the degree certificate. We are learning this to earn money. Capitalizing. මේ හැම එකම ඉගෙන ගන්න සල්ලි හම්බ කරන්න. එහෙම ආසාවෙන් ආදරෙන් ඉගෙන ගන්න. If you can learn it in your by heart, don't shift delete after the exam this. Why? That will be a disaster once you are appointing as a finance accountant or junior executive or senior executive in finance division. Why? You are supposed to perform this. Then do it in your heart. Real effort should be there for learning this. That's very important. Keep that passion. ඒකට අමාරු වෙන්නේ නැහැ. සමහරවල් ඉන්නවා. මේකේ marks තියෙන්නේ 80 sorry 75 to 100 many people and 30 to 20 30 to 10 many people, not 60, not 55. Why? If you work, you are ending with 70 to 100. If you work, if you not work, if you miss something, you are ending with below 30. That's a disaster. This is not a theory subject. We don't have gray color answers. We are having black and white answers. It means marks 100% given, standards. Right? You have very sharp answers, but it's a theory subject, maybe HR or sometimes auditing. All are theory subject. So you can write, you wish to write that relevant to the question. You can create answers, but here standards are there. You have to give within the standard, right? If you can tally the console question, I can't reduce marks. If you have given answer maybe essay types, I can reduce my marks according to my judgment. That's like literature paper, right? Literature paper, we are giving marks for the pages. 2 pages, 10 marks, likewise. But accounting is not like that. You have given the answer, examiner is helpless. I have to give the marks. That's why it's a 100 marks paper. Work hard. If you are putting that effort, definitely it will make a big shot. Right? Right. We jump into the course and we are having different techniques. Right? As accountant, we are having different techniques to analyze financial statements. As accountant, topic financial statement analysis, sorry, financial reporting. We are having 4 topics, right? Financial statement, we had 4 topics. Under 4 topics, this is the 4th one, right? That one, we wrote it. And under that, as accountant, we are having different financial analysis techniques. First one, ratio analysis. As accountant, we are having different financial statement analysis techniques. Anything you want? Analysis techniques. First one, ratio analysis. Second one, common size financial statement analysis. Third one, trend analysis. Trend analysis. Fourth one, horizontal and vertical analysis. Horizontal and vertical analysis. Once you are doing the analysis, once you are doing your analysis, the accountant should select. Appropriate techniques. Appropriate technique. according to the requirement. According to the requirement. Point number 1, ratio analysis. Yeah, moving to ratio analysis. And a ratio analysis, you can put a definition. Do we need? No need, right? Here we have definition. You can prefer that, right? But you can put it. You can put like this. Ratio analysis. Ratio analysis can be done. Ratio analysis can be done. To analyze different areas. Different areas. Different areas. Different areas. One, profitability, liquidity, operational efficiency, solvency. 1, 2, 3, 4. Can put that. Different areas such as or like profitability, liquidity, operational efficiency, and solvency. Right? Okay. Then as per above, as per above, as per above areas, we are having different types of ratios. Different types of ratios. Different types of ratios. Put that numbers, liquidity ratio, efficiency, leverage, coverage, profitability, capital market ratios. 1, 2, 3. Put that and write it. 6 ratio categories. Write it. Right. Write it. Answers we are getting through about ratios. Answers we are getting through about ratios. May have different modes. They have different modes. They have different modes. Modes. It will be a percentage, terms, uh, type of percentage, terms, number of days, within bracket, the period, number of days when the Quran, number of years, number of months, right? Period and average. Right. An average. Right. Yes. From base, right? Base and average and fraction. Fraction. Fraction means you know, right? Maybe denominator and numerator. I don't think. I see. Sometimes you are telling that half, one fourth, right? What's the so these are the types of answers you are getting for ratios, right? Sometimes you are telling that this higher is good, lesser is good, right? Okay. Then write it. These answers should be compared with qualitative factors relating to an organization. Qualitative factors relating to organization. Factors relating to organization. Such as 1, 2, 3, 4, 5. And right. මොනවද බලාගන්න මේ මේක බලාගෙන ලියන්න then think and write customer satisfaction complaint employee satisfaction technology they are using they are having unique type of maybe standard costing formula and the taste let's say you are having the star rating hotel rating the star rating company the insurance company they are like a reinsurance capacity so right it depends right you are lucky at the chat right even you can write something you can write business reputation legal compliance cultural advanced company if they are not complying with legal environment it is not viable we are having maybe 40% 60% profit net profit margin no need not survival that's we cannot do it මට එපා මට වතුර බෝතලයක් ගෙනත් දෙනවද එපා වතුර බෝතල් දෙකක් විතර ගෙනත් දෙන්න අය 6-7 ලියා ගන්න අපරාධ වෙන්නේ you can repeat this exercise at the exam as well මේකත් ඔන්න ලියාගන්න. ලස්සන wording එක. It will enhance efficiency of the decision making. After analyzing, after considering this, it will help to enhance your decision or something like that. It will enhance efficiency of decision making. Right? It will enhance the effective of decision making. After analyzing, after considering these factors, it will enhance your decision making ability. Okay. However, as accountant, once you are doing, uh, however, as accountant, once is doing ratio analysis, he may face different challenges. Different challenges. However, as accountant, once he's performing, this ratio analysis. Thank you so much. However, as accountant, once you are performing this ratio analysis, he may face different challenges. Example. You can write those. Limitation of financial statements, historical information, different accounting policies, lack of standard of comparison, quantitative analysis, window dressing, changes in price level, seasonal factors, ratio account for one variable. No need to write all the things, you can write 6, 7, not 6, 7, 5, 6. What do you mean by window dressing? Any idea? It's a type of limitations, right? As accountant, once you are doing ratio analysis, this will be a challenge. I hope the notes are completed now. That's about the note, right? So from here onwards, you can have that track record on your mind now. Don't take a visit to the number. You need to have a link. Once you're starting a business, you are recording transactions. Transactions source documents to uh, initial books, general ledger trial balance to financial statement to analysis to interpretation to communication. Once you're analyzing, we have different techniques. it will link to your note. So you should have a proper link with your subject with this story, right? With this note. Note is sent, right? Then over the AKK this is the oral note. In between that, now we are going to discuss about different ratios that can't be in your note. That should be in your head, right? Different ratios under this different topics, right? Okay, I didn't tell you what it is. Window dressing. Other than that, on a okay, what do you mean by this window dressing? Any idea? At the last moment, at the last moment, they are dress up financial statement, right? As a window. So once you're seeing in the window, we can't, get the real picture inside the house, right? They're creating a dress. They're creating a dress to the numbers at the last moment. It means they're changing numbers at the last moment. That's called window dressing. So the real picture will be covered through a window, right? So they are dressed up. They are changing numbers at the last moment to create a good picture to the society to communicate to the stakeholders. That's called window dressing. Last moment, it is creating a loss. What you are going to do? You want to make a profit. What they are putting bogus transaction, immature revenue, cash, revenue credit, debit to debtors, right? They are creating some bogus entries. That is called window dressing. If they want to reduce the profit, they are putting some provisions. They are changing assumptions, right? That's called window dressing. Last moment changes to change this type of result, finding with different ratios, unusual ratios. You can't get maximum out of the ratio calculation. That's a limitation of ratio calculation. And then window dressing, right? Window dressing. Okay. Right. Okay. So we can go to this different type of ratios, right? Different type of ratios. I'm discussing one by one. I'm discussing one by one. You can go through. I'm following these types, right? Profitability, efficiency, and gearing, and liquidity ratios. Liquidity ratios. Firstly, we are focusing about current ratio. Current ratio, always we are discussing about what current asset and current liability. Liquidity means what is this? Liquidity. Liquidity versus solvency. Two different words. Liquidity क्या है? The possibility how soon we can convert the asset to cash. That was liquidity. Yes. One definition. But here we are discussing about something else. Right? Same meaning but different. How soon we can service our short-term debt as an organization. For that, we need to have that quality. In our asset, we should have that liquidity. That asset quality should have that feature. But that feature, our assets should be transferred very quickly to cash to settle that liability. As a whole, as organization, liquidity perspective for organization, we are discussing here. Liquidity perspective asset, we explained nicely, right? Liquidity perspective for overall company means whatever the asset they are having, how soon we can service our short-term debts, right? In other words, can we, in general words, can we settle our short-term liabilities without an asset? How fast we can settle our short-term liability? That's called liquidity. So then you can question from yourself, am I liquid now? Do I have the liquidity? Can I service my short-term the commitments? As a country, we failed, right? Last maybe 1 year, 1.5 years back, we failed to commit our day-to-day operations, right? We didn't have foreign currency to purchase fuel. What happened then? It means we had a serious liquidity issue. Our short-term debts can't be serviced from our short-term assets. As a company, we need to focus about that. In other words, what do you mean by solvency? Liquidity versus solvency. Solvency क्या है? Kita tengok alternative. Liquidity versus solvency. Solvency means liquidity for short term, solvency for long term. Long term perspective, can we service, can we settle our long term liabilities as organization? That's about solvency, whether we are solvent or not. If we are having long term liquidity issue, you will end up with a serious solvency issue. Serious solvency issue. Why? The classical example is what Sri Lanka. Because of this short-term liquidity issue, we are getting what? Loans. We are getting loans and survive today. After 5 years, it will bulk as a loan bulk, long-term liability bulk. Can we service that? It will impact to our solvency. Serious, continuous liquidity issue will lead to a solvency issue. Liquidity focus about short-term, solvency focus about long-term, right? And liquidity ratios. In general, we are focusing about current asset and current liabilities. Current asset and current liabilities. Current asset divided by current liabilities. Current asset divided by current liabilities is current ratio. Current asset divided by current liabilities, right? Then here we need to understand what's the content of our current asset and current liabilities. Current asset and current liability should have a proper definition. Proper definition. current asset, current liability. You will have proper definition for current asset, current liability. How many years there is current asset, current liabilities? How would the year conception of the month? What do you mean by current asset, current liabilities? Asset, you have definition. Liability should have definition. And current asset, current liabilities, again, you should have a definition. You have to be thorough with it. Asset definition. Very important. You have to be a master on asset definition. As a result of past event, today we are having a resource with having economic benefit. That economic benefit can be measured reliably and can be controlled by the entity. And that results can be measured reliably in the books. That's what I said. The key words of that sentence is what? Control. Control. That's a key word. That's a turning point is in accounting. That's a key word. Not only the ownership, but the control. As an accountant, we should know it. So without having ownership, we can recognize asset in our books. අපිට අනුන්ගේ asset අපේ books වල අපේ asset වගේ පෙන්නන්න පුළුවන්. Hey, asset definition discuss about not the ownership but the control. If we can control over asset without having the ownership, we can recognize that as an asset. That's why we are doing consolidation. That's why we are doing right of use asset. That's why we are doing finance this asset till we acquire that. We don't have the ownership, but we recognize asset. Right? Asset definition is very powerful. Okay. Likewise, asset, yeah, change it to the current asset. What do you mean by that? As a counter. Example, listed at young current asset can be receivable, cash, debtor, inventory, this advance payment, many more. What do you mean by that? And current asset can move up. Example there. What is that? Then counter connected with that. You need to have answers to each and every one. Everything. What is that? What is that? Ask 7 questions on one particular topic. අඩු කාලෙකින් ඒක නෙමෙයි answer එක. ඒක alternative answer. ඒක තමයි මම කියලා දෙන්නවා. So we are having an understanding that current asset is an asset having less than 1 year. Less than 1 year period or something like that. උනේ නේද? ඔළුවේ තියෙන්නේ මේක. But standard doesn't say that. He focuses on that. What standard says? What standard says? And it really says the assets will realize within your one operating cycle. One operating cycle. Right? Within one operating cycle, we consider as a current asset. That operating cycle should be decided by an entity. That may be 1 month, that may be 6 months, that may be 1 year, that may be 3 years. Your operating cycle should be decided by the organization. Right? Within your operating cycle, within one cycle, if it is getting clear, if it is realized, it will be identified as a current asset. Right? As an organization, each and every asset very difficult to determine this operating cycle. If you are struggling, if you are difficult to recognize the operating cycle, you assume that default operating cycle is 1 year. Right? That is the standard guideline. You should know it. Without knowing this layman language, you need to know what the standard clearly say. That's all about the language. That's all about accounting. Right? But it clearly saying, if you can identify, if you can determine operating cycle, if I struggling, use this as 1 year, right? Then and there we are considering the within 1 year realized asset as current asset. Okay, that's the understanding we are having on your head, but you need to have proper understanding behind that. So that within 1 year realized asset, current asset, it is correct, but you need to know the background behind that. It is an alternative option. It's a kind of a given option. It is not fair, right? Each and every company, you are giving 1 year is the current asset. To the construction company, to the yogurt manufacturing, the year is the current period. Not fair, right? Building එක හදන එකයි yogurt එකක් හදන එක. Not fair. That's why the accounting is very sound, right? Very sound, very sharp, very clear. You need to decide as a accountant the operating cycle what it is. Struggling to decide, use it. This 1 year period as a operating cycle. Within one operating cycle. One operating cycle means what? What do you mean by one operating cycle? Supplier. They are buying, right? Buying stocks. Stocks maybe ගන්නේ goods. Then අපි කියනවා නේද stocks here. Right? Stock we are putting stocks. Manufacturing. Those selling cash will be paid to supplier. Right? This is a type of a cycle in organization. Supplier buying goods, stores, manufacturing into the stores, selling debtors, debtor will settle cash, that cash will be settled to suppliers. Right? It's operating cycle. Efficient company mean efficiency mean having more operating cycles in the organization. More operating cycles mean not types of operating cycles. This is a one cycle, another cycle, not more operating cycle. Like this, we need to have not 7, we need to have 15 in the year. More operating cycle. More operating cycle means if you are earning maybe 1 million from this cycle, why? We are getting manufacturing, selling to a profitability. Once you are selling, you are deciding what? Selling price with a profitability, right? Selling price. You are selling. If you are earning 1 million here, if you can do 7 million. If you can do 15 million. We need to have more operating cycle within a year. That's called efficiency. Right? If you are realizing some asset within this operating cycle, called as the current asset. Okay? Current asset. That current asset and that current liability will be compared through current ratio. We compare through current ratio. Interval class. Financial reporting, corporate reporting, interval and syllabus. Prohibited. Translate. Winter and the Lamit Maron, I can say, no. Yeah, we'll finish this liquidity ratio and we'll take a break. Right? Don't break. It is not a. Don't go for movie and shopping, right? Go to the washroom or the lunchroom and come. Yeah. Right. Okay. Current asset and current liabilities. We are comparing this, right? So once you are doing this, sometimes some balance sheets you don't have current asset and current liabilities. Some companies, they're not showing current asset, current liability in their balance sheet. What type of companies? They're going through some account set, financial statement in the balance sheet. They are not having current asset, current liabilities classification. What are those type of companies? Finance, insurance, banks. You are going through a balance sheet. You can figure it out. What are the current asset and current liabilities? You don't have that classification. Is that the violation of accounting standard? No. Case 1 clearly saying that if it is required, they can give liquidity order in the balance sheet. According to that, they are not giving current asset and current liabilities. Don't search current asset and current liabilities in the banking sector. If you want to get it, what we need to do? We need to go to where? We need to go to maturity note, maturity disclosure, and identify maturity of the assets and decide what's your current period and calculate it. No point, right? If you're having current asset and current liabilities on the balance sheet, calculating this ratio may be not viable, not make sense. Decide according to your decision. But you need to have that practical sense. Current asset and current liabilities. Yeah, current asset and current liabilities. Here we are getting a number like this 1.2 to 0.5. So number like this. It means what it means. What's the meaning of this? The meaning of it. What is this? The rupee value or terms or anything else? Terms times. What is this? 1.2 times, right? 2 times. Times. Means to settle 1 rupee of 1 rupee of liability. We are having 2 rupees. We are having 2 rupees. In other words, it means 2 times is our current ratio. For 1 single unit of liability, we are having 2 assets to settle it. That's the meaning of current asset answer. Normally we should keep two in organization. That's a general understanding. There's no standard. Right? What do you think? Having higher amount or low amount is good? Water 2, 1, 0.5 වෙන එකද 2, 3, 4, 5 වෙන එකද හොඳ? What do you think? 2 and above. What do you think? 2. ඇඩිවෙමින් හොඳයි අඩුවෙමින් හොඳයි කියන්නේ. කොහොමද කියන්නේ? ඇඩි වුණත් හොඳ නැහැ අඩු වුණත් හොඳ නැහැ කියන්නේ.
Even taking a bit.
වැඩි වුණොත් අන්න හරි. එයා කියන්නේ වැඩි වුණත් හොඳ නැහැ අඩු වුණත් හොඳ නැහැ කියන. ඒ වුණාම උත්තර දෙන්න ඕන. වැඩි වුණොත් මොකද වෙන්නේ? 2, 3, 5 කියලා එන්නේ කියන්නේ මොකද? We are having idle current asset. We have not invested in market, right? Underutilize our current asset. So we are having excess liquidity. Keeping excess liquidity within the organization without investing is again a loss-making campaign. Gaining efficiency. We need to have moderate level. 2 may be good. Average level maintained. Having less than that. Again, serious situation. We are not having liquidity. Not having liquidity and excess liquidity is an inefficiencies. Have average one. Okay. I think that's all right. That's about current ratio. Okay. Moving to liquidity ratio. Sorry. Quick ratio. This is a extended version of a current ratio. Specific ratio. We have done a type of a small adjustment to current ratio. And we are giving type of a version, advanced version of current ratio. What is that? Quick ratio. You know that in the current ratio, the current asset, we are having some less liquidity items. What are they? Under current assets also, we are having less liquidity items. That is less liquidity is there. What are they? Cash, less liquidity item. What are they? Current asset. Yes. It will take time to convert to cash. Inventory. What else? Advance payment. Correct. Advance payment, prepayments, inventory. These 3 things. Receivable from government, right? So can we get that receivable from government very fast to settle your liability? We have done advance payment. Can you return it back easily? Prepayment? Very difficult. So under this current asset, what we are going to do is we are removing less liquidity items and deducting by current liability. That is called quick ratio. That quick ratio should maintain maybe 1. 1 is good. To settle liability, we are keeping very liquid asset equally. We don't need to keep the excess assets. The current liability means any time they can come and ask money. If it is so, we are keeping as it is cash 1 to 1. Quick ratio means current asset minus less liquidity items. Liquidity items maybe inventory, advance payment, and prepayment. Advance payment and prepayment. Right? Right. So liquidity ratio means current asset minus inventory, advance payment, and prepayment divided by current liabilities. Okay. So liquidity ratio is done that time. Right. Liquidity ratio. Under liquidity ratios, you are basically focusing about current ratio and quick ratio. Right. Current ratio and quick ratio. Let's say your current ratio, your liquidity ratio, always less than the current ratio. Make it not have any way. Quick ratio is always less than the current ratio. Why? You can understand. Always quick. What do you mean by that? Quick ratio equal current ratio. What do you mean by that? Quick ratio equal current ratio. What do you mean by that? In other words, quick ratio equal current ratio. Ini artian bukan. Bagi company ke inventory ne, advance payment ne, prepayment ne. Are you getting me? Right? If the maximum you can equal quick ratio and current ratio. Right? Quick ratio can't be go more than current ratio. Understood what I'm saying? Right? Make a note on that. Make a note in other note in link when a country in the island, when a people in the island. May make up them note the other note that you are right. Whenever the younger to 48. එතකොට financial statement presentation එක කරනකොට මේ වගේ තිබුණු ගමන් තේරෙනවා බොරුවක් කරලා තියෙන කියලා. ඒ quick ratio එක කැල් කරන් එනවා current ratio එකට වැඩි. It can't be right. Okay. I hope that is clear. So we are done with this liquidity ratios. We are moving to efficiency ratios. Then take a small break and come. Right. Yes. Okay. So, you have to move the yeah. Take your finance cash, they will have to go. They may I parcel, take the day, they may not take up. I take up here, I'll take the SLD. With the money. Parcel, they take parcel, if they are having any corruption, dialogue use करा. I said if I will use the past year. If I will use कराने किया, any corruption, dialogue use करा. लेकिन बड़ी जल्दी. बस से ऐसी रेट the bus say they take the any of it. Okay, Yes. We completed this, right? And ratio, okay, and quick ratio, on the liquidity ratio, right? And then we are moving to efficiency ratios. Efficiency ratios, always we are focusing about this trading cycle. We are focusing about this operating cycle. Efficiency means having more number of operating cycles, right? Seven operating cycles, if we can improve to 15, that's called efficiency. Efficiency. To ensure the efficiency, definitely we need to have a proper efficiencies in different areas. We are selecting under this operating cycle. We are having main key three elements: inventory, debtor, and creditor. These are the three elements in three items in this chart. Three items mean these are the chart things. These are the elements basically. Supplier, creditor, debtor, and store basically inventory. These are the three elements we are focusing about the efficiency. After achieving the efficiency, we are moving how many operating cycles? 7 or 15. We can increase it to 15. It is called efficiency. Efficiency means how fast you are completing your operating cycle. Right? Then we are focusing about inventory, debtor, and creditor. Once we are focusing about these three: inventory, turnover, debtor turnover, creditor turnover. How fast this is operating? How fast getting inventory convert to turnover? Inventory turnover ratio. If your inventory turnover ratio maybe one, what it means to you? Within 1 year, you are selling it one time. Right? Inventory turnover, if you can make it very fast, maybe quarterly, maybe monthly, maybe twice in a month, 4 times in a month. Likewise, you can make it very fast. Inventory turnover. How fast you are selling inventory. How fast you are collecting money from debtors. That's very important. How fast you are paying to creditors. That will complete your journey. If you want to add some more here, manufacturing time, all these things can be added. But it depends. You don't have a ratio like that. You can add that. Maybe manufacturing delay time likewise. Right? And inventory turnover. How we are going to calculate it? So then this calculation pretty straightforward. Inventory turnover. With this turnover, we are discussing about the number of days as well. Inventory holding period. Inventory holding period. Debtor settlement period. Creditor settlement period. With all these turnover ratios, we are discussing about the related period. Means inventory turnover, inventory holding period. If you are having higher inventory turnover ratio, you are ending with very less inventory holding period. Higher inventory turnover means very quickly you are turning inventory to sales. Right? You are turning inventory to sales. It means you are having very less inventory holding period. Augmented inventory sales with the conversion. Inventory holding period versus inventory turnover ratio, debtor turnover ratio, creditor turnover ratio, right? We are discussing here about efficiency ratios. Efficiency all about how fast you are completing this cycle. Within this cycle, we have identified key main elements like inventory, debtor, and supplier. Under inventory, debtor, and supplier, we are calculating inventory turnover, debtor turnover, creditor turnover. Turnover means how fast getting realized, how fast getting changed. And parallelly, we calculate inventory holding period, debtor settlement period, creditor settlement period. Right. This is very tactical ratio. You can calculate inventory holding period, inventory debtor settlement period, creditor settlement period, parallelly with turnover ratios. Turnover, once you are having more turnover, reduce the number of days. If you are having higher inventory turnover, mean number of days holding you are in the store may be reduced. Let's say your inventory turnover 365. 365. What's your inventory holding period? 1 day. 365 times you are having inventory turnover. It means for 1 year, how many days you are keeping inventory averagely? 1 day. Let's say this one 90 days. And it is basically quarter. So 90 days inventory turnover. 90 is inventory turnover. It means 90 means for year, how many days you are keeping inventory? 4 days. 4 days we are keeping. 365 divided by 90. Likewise, you have a very pattern in between turnover ratio and the holding period and settlement period and debtor settlement period. Keep remember that. Right. Here we have inventory turnover ratio. How we are going to calculate inventory turnover ratio equal cost of goods sold divided by average inventory. Cost of goods sold divided by average inventory.